We'll fight her pocket brass or soup.
Sugar dates and figs, sugar dates and pistachios. Would the lady like a necklace? A pretty necklace for a pretty lady.
Welcome back, YouTubers, to the second video of the Oz-Aware series. Our topic this time around is trade and the Trans-Pacific Partnership. Trade is the action of buying and selling goods and services. All countries naturally have tradable goods and services which are abundant or rare in different parts of the world. In a world of increasing globalization, the opportunity for international trade is increasing. Governments can take many reform approaches to encouraging or restricting international trade. Three basic approaches to trade reform are unilateral, for the country to directly remove its own trade barriers to all countries; multilateral, for a group of countries to negotiate and remove trade barriers within themselves; and bilateral, when only two countries do this. Governments often aim to protect the operation of business within their borders. However, demand for goods and services that cannot be satisfied domestically will require international trade. Governments can protect domestic trade from competition with international trade. This is usually through restrictions and tariffs on the importing of goods and services. A tariff is basically a tax or fee paid to governments by those looking to export goods and services into that country. A trade agreement is a treaty between countries on conditions of international trade in goods and services. The particular trade agreement of interest in this video is a Free Trade Agreement, or FTA. An FTA is a negotiated treaty to establish what's known as a free trade area between the countries involved. It is a form of preferential trade reform and can be bilateral or multilateral. After agreeing to an FTA, trade will have eliminated tariffs and discrimination on goods and services between the countries. This occurs on substantially all the trade between its member countries. There is no independent, comprehensive, pre-signing cost-benefit assessment of international trade agreements in Australia. Australian governments often predict pre-agreement that an FTA will result in a significant boost to the economy. Trade benefits post-agreement, however, are usually not as positive and are difficult to quantify. Bilateral FTAs assessed by the Productivity Commission have realised little benefit and have been labelled too complex and too costly. The conclusion of these assessments is that the best way of benefiting from international trade was other multilateral or unilateral reforms, without the complexity of preferential FTAs. If you include the China-Australia FTA, Australia has 10 FTAs currently in force. The countries covered by these agreements account for 65% of Australia's total trade. Australia is also currently engaged in 6 other FTA negotiations. These negotiations account for a further 6% of Australia's total trade. They are 2 bilateral FTA negotiations, one with Indonesia and one with India, and 4 multilateral FTA negotiations. One of those multilateral treaties is called the Trans-Pacific Partnership Agreement, or the TPP. The Trans-Pacific Partnership Agreement, or TPP, is a preferential multilateral FTA. It has currently been negotiated by 12 Pacific nations and is expected to be agreed between the countries in the not too distant future. It is the largest trade deal in history. Australia confirmed it would enter the TPP negotiations way back in November 2008. Since then, as is Australian government practice with all trade deals, the negotiation and content of the deal have been withheld from the Australian public. The government says that this confidentiality safeguards our negotiating positions and strategies. The Trade Minister is responsible for Australia's representation in the treaty negotiations. The Trade Minister argues that despite the secrecy, after the deal is signed, the public will have months to look at the deal before it is ratified or recognised into Australian law. Apart from government representatives and consulted corporations in the TPP negotiations, only select parliamentarians can view the text of the TPP agreement. Upon doing so, they must sign a confidentiality agreement not to discuss what they have seen for a minimum of 4 years. even once the final text does enter the public domain, the text cannot be changed. As a result of the secrecy, the primary source of information comes from the leaking of draft TPP agreement chapters under negotiation. Of the 29 chapters in the TPP agreement, so far only the draft form of 3 chapters have been released by WikiLeaks. These are the intellectual property chapter, the environment chapter, and the investment chapter. WikiLeaks has offered a crowdsourced bounty of $100,000 US to potential whistleblowers to provide the remaining 26 chapters. The Australian government has stated the TPP will forge stronger economic links between economies in the Asia Pacific, provide new opportunities for Australian goods to be used in manufacturing and production, increase access to new markets, benefit the services sector, and benefit both consumers and business in electronic commerce. Despite this statement, the hypothetical scenario of tariff removal between the TPP member countries modelled by the US Department of Agriculture showed a 0.0% increase in baseline real GDP, which is a measure of economic growth, for Australia. Industry experts have long argued that the treaty-making process in Australia requires greater transparency, public participation, empirical analysis, and parliamentary oversight. Although the government has undertaken thousands of consultations for the TPP agreement, this consultation has generally been one-on-one meetings with the businesses and corporations involved in the deal. The process in Australia for changing the TPP agreement and other FTAs between the time the countries sign the deal and when the deal is ratified is limited. After signing, the text is tabled in Parliament for 20 sitting days and the legislation to implement the agreement is presented to Parliament. At this point, the text becomes public and there is an opportunity for public submissions to the review committee. As mentioned, however, the text cannot be changed as a result of any public submissions. Parliament does not vote on and cannot change the text of the TPP agreement. Parliament can only vote on the legislation required to implement the agreement in Australia. It is most likely only a few chapters of the TPP agreement will require changes to legislation. Many chapters may restrict the ways in which current and future Australian governments can legislate, but the chapters themselves will not require legislation to be implemented. However, the Senate can hold its own inquiry or review of the TPP agreement by voting against or amending some or all of the implementing legislation. This can prevent or delay the final ratification of the agreement. The TPP is naturally supported by the government and the business sectors consulted in its development, but support for the treaty is thin outside those circles, based on general FTA concerns and the information from leaks around what's in the TPP agreement itself. Many see the TPP as less of an FTA and more of a power grab by corporations to make global regulations that will monopolise and enhance their profits. So why the concern? What is in the draft TPP agreement that we know so far? The content detail of the 26 unreleased chapters is unknown. However, we do know what is, or was, detailed within 3 chapters of the TPP agreement. The Productivity Commission recommends that Australia should avoid the inclusion of intellectual property matters in bilateral and multilateral trade agreements. Strengthened copyright protection legislation is proposed in the TPP. The draft chapter of the TPP shows these protections threaten to undermine Australia's ability to maintain and exercise its own right to change existing flexibilities on copyright limitations and exceptions. These copyright exceptions enable fair use of copyrighted material to encourage creative contribution to Australia's culture and economy that would be illegal otherwise. The TPP agreement also proposes patent law changes that are particularly relevant to pharmaceuticals. Pharmaceutical companies want to extend existing patent rights over drugs they manufacture. These patent changes would actually inhibit competition by shutting out generic manufacturers longer. That means consumers will pay more for medicines for much longer. Resetting of patents due to only slight alterations to the drug has been another inclusion to also cause concern. The government has stated it will not accept any TPP outcome which undermines the integrity of our National Medicinal Subsidy, the Pharmaceutical Benefits Scheme, or PBS, and has stated the TPP will not make it harder for Australians to afford basic medicines. Leaks reveal that some of Australia's propositions to do this in TPP negotiations have been rejected by the other parties. Some changes to the PBS are not safeguarded and can be achieved by changing regulation. As this is not a change to legislation, the changes are not voted on by Parliament before being enacted. There are also concerns around the Intellectual Property Chapter's provisions to impose on Internet Service Providers, or ISPs, a legal obligation to fight against online copyright infringement. This includes clauses to mandate ISPs to communicate to their users any supposed infringement committed through their accounts, take down from the internet information that supposedly infringes on copyright, and collect metadata that allows identification of users that supposedly have infringed the law. The TPP does not limit this responsibility to just ISPs, but to extended network providers like schools, libraries, or any public Wi-Fi provider. Australian Productivity Commission reports and the inquiry into the Trade and Foreign Investment Bill, amongst others, all recommended the government should seek to exclude investment clauses from trade and investment agreements. However, as with the IP chapter, this advice is not being heeded by the government. A particularly contentious issue in the investment chapter is the inclusion of an expanded investor-state dispute settlement, or ISDS, mechanism. An ISDS under the TPP gives foreign investors the right to sue governments over domestic legislation that results in the loss of expected future profits for the corporation. Corporations would be elevated to the level of sovereign governments and allowed to privately enforce a public treaty in an ISDS tribunal. An ISDS tribunal is not within a country's domestic courts or under sovereign laws. No cap has been put on the payouts which may occur from public funds as a result of ISDS trials. Tribunals will be staffed and adjudicated by the private sector, and there is no avenue for appeal. The number of ISDS cases has increased dramatically in recent years. This is not the first FTA Australia has engaged with that includes an ISDS. Australia has investment agreements, such as free trade agreements, with 28 countries which all include an investor-state dispute settlement mechanism. The ISDS clause does not require a change to Australian legislation and therefore will not be voted on by Parliament before it is enacted, after the TPP is signed. Australia is currently going through its first ISDS trial. Investment clauses under a 1993 trade agreement with Hong Kong are being utilised by the US tobacco corporation Philip Morris. Philip Morris is suing the Australian government over the Tobacco Plain Packaging Act that was introduced in 2011. Philip Morris Asia has stated the laws to reduce smoking rates and improve health have undermined the economic rationale of their investments. They say this has caused potentially billions of dollars in lost profits which they are attempting to recover from the government. Concerns have also arisen from the leaked investment chapter about protection of Australian food labelling schemes to help consumers determine the source, quality and processing of their purchases. The environment chapter is stated in the draft TPP to promote mutually supportive trade and environment policies and promote high levels of environmental protection and enforcement of environmental laws. This sounds reasonable and well intended, but after the release of the chapter, the text has been deemed as having an absence of mandated clauses or meaningful enforcement measures when contrasted to other chapters. There are no required penalties and no proposed criminal sanctions for non-adherence in this chapter. The heavier wording of other chapters has raised concerns that the TPP will undermine Australia's environmental laws, policies and regulations. For example, the investment chapter includes self-cancelling language stating that a signatory government may enact public interest environmental protections, so long as this does not conflict with the sweeping rights that the TPP gives to foreign investors. The lack of support on climate action is also worrying. In the leaked chapter, the parties merely agreed to discuss ways to deal with climate change. Crucial legislation has recently passed in America that would otherwise have most likely halted the TPP agreement. Andrew Robb has stated that the conclusion of the TPP discussions is literally a week's worth of negotiations away. It is expected that the TPP agreement could be signed as early as late July at the next planned ministerial meetings between the participating countries. Thanks for watching this and previous videos. The next video will be based around climate and carbon policy in Australia. Stay aware.